Welcome back, ladies and gentlemen. You're watching Startup Central with me, Sumita Karir, and of course, putting the spotlight on PB Fintech, which is on fire after the top boss reiterated that 30% growth outlook is what the company is seeing for the next 5 years. We caught up with Yashish Daya. He lays out the roadmap for the company's healthcare investments in an exclusive chat. Mr. Daya spoke on business outlook for the company 2025, regulatory tailwinds that will enable that kind of business, and general insurance price hike and its impact on demand. Let's take a look at that exclusive interaction.
No, when I speak of growth, I only talk about the core business growth, always. I never include the new business growth in that. And I've been quite consistent in that for the multitude of years.
If the business or the core business is growing at 30%, then what happens to the advantage of operating leverage? Will operating leverage start kicking in more and more like it has kicked in last couple of quarters? Because at 30%, your fixed cost is going to remain constant and benefits of operating leverage will start kicking in. So will we see incremental benefits of that kicking in every quarter?
Yes, without a doubt. But all I wanted to say was that's not the objective right now. I've always said we are like a 16, 17-year-old, which is what we are. And what that means is we are just a company that's, or a student that's just about to finish school and go into college. We are nowhere close to being in a job. And even if we were in a job, we are in the first 5 years of the job. We are not in a position. So typically, if you look at a human being's career, parents put in money, then the human being, gets into a job, then builds a career. And at some point, they also start making significant money, right? And so we are nowhere near that point where we are trying to profit maximize. We are at this point trying to become stronger, learn more, grow faster. That is really where we are. And I've again been very consistent on that. That said, profits will come. They are, because as a business, we haven't done unprofitable business. And so what that implies is every time I do a transaction, we do make some money. And that money is only adding up as we do more and more transactions. And yes, our fixed costs will and should always stay lower than fixed cost growth should stay much lower than our revenue growth. And even in the revenue, we should have some leverage because as we get further down the years, the brand confidence increases, our people's confidence increases, the conversion rates improve, and we have been seeing all of that.
You have one non-core business, which is Paisabazaar, where you've invested. And the second one is an investment in a healthcare venture where you're looking at expanding. Could we be looking at more news on new investments and non-core businesses from PB Fintech this year?
I don't think you would hear more news, but you would see hopefully some action on the healthcare side. On Paisabazaar, the entire credit and unsecured lending area has tightened a bit. So Paisabazaar has effectively started a new business in secured, which did not exist. The good news is secured is picking up, and secured in terms of overall disbursals has now overtaken the unsecured part. But the unsecured has taken a big hit. And also in secured, you make much lower margins. So I would say, but it's remarkable that within 1 year, the secured business has built up. And so I feel confident about that area.